Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with Trade the Chain and Market Rebellion. My name is Nick Mancini, Director of Research at Trade the Chain, joined by Monty and CJ, both Senior Research Analysts at Market Rebellion. Welcome, everybody, to the show. Getting started a couple of minutes late as we were watching the red candles that started to really appear on the screen. I think we've all been, more or less biased short. But it is quite rare that we see, anywhere from 2 to 10% drops across assets before we get started. So we're, of course, checking all of that action out. So we're going to go ahead and kind of just dive right into what's going on in the charts, and we'll kind of cover the macro in a second. But we did just watch Bitcoin drop, I believe, 2 to 3 percentage points in the past couple of hours. ETH down a little bit under. Pepe is down 40% today. A big, pretty much large bloodbath. And the one thing that, it's interesting to notice is, of course, equities are slightly down. But the S&P 500 futures are only down 0.25%, whereas, crypto is down, like I said, multiple percentage points. So let's go ahead and just unpack this and what we think is going on. Of course, we had FOMC last Wednesday, which CJ and I covered, 25 basis point hike. Fed is keeping, terminal rate at 5.25%, but we could have more hikes in the future. And the ETH Foundation also was caught transferring ETH to Kraken last Friday, which definitely started the scare around ETH price action around the highs of 2000. So we, of course, have our, predicted lines based on, supports and resistance, and we're obviously headed lower. So just want to open it up to CJ and Monty before we move any further. Gave the overview. We've got FOMC, we've got CPI and PPI coming up this Wednesday. ETH Foundation selling. Equities are, more topsy-turvy, to put it best. So what are you guys seeing? Let's start with Monty first. I know you have a bit of a strong opinion on what may come next. So what are you looking at right now with equities? Let's call them, more or less even, but crypto clearly dropping like a rock right now.
Yeah, that's a discrepancy that's always worth noting. Whenever we have that divergence between equities and Bitcoin, you need to take notice. And one thing that I think is on everyone's mind, and I think is the question that we should be asking and trying to answer in today's episode is the echo bubble over? Is this the end of the positive price action for Bitcoin? Coming into the year, overwhelmingly negative sentiment. And then, of course, price went up. We, retested 30K. Since then, are coming back down. We put in a lower high. The question is, for me, is that the end of the bullish price action? And we're seeing some red flags that you typically see at the tail end of a bubble, right? With things like Pepe and Bobcoin, up magnitudes of a percent before crashing. Those are the red flags you see right before that bubble gets popped and price comes crashing down. So, I'm curious to see if we're at that point. CJ made, I think, a very nice point this morning in a show we do, the Doge of the Day, about kind of comparing right now to 2019 and how similar in terms of time duration it was that we saw. It was basically 120 days of positive price action before.
Can we take a look at that chart real quick? Do you mind if I just bring it up?
Which one do you want me to pull up, yours or Monty, CJ?
Mine, and then Monty, if you can finish your points. But I just wanted to.
Yeah, I mean, it's pretty shocking.
Can't name drop CJ without pulling up his chart, Monty. So we broke the cardinal rule.
True. But I think that, when you see exactly how similar from a time perspective this bubble has been to previous bubbles in Bitcoin, you'll be a bit concerned because you can see there 126 bars, about 126 days of price action from the top. And, more or less the same exact thing in 2019 as we came out of the lows about 120 days. We put in a lower high, and then from there, ultimately, grinded sideways, grinded down until COVID, and then we went higher. So from a timing perspective, it looks like the bubble could be popping. We also have those signature things. In 2019, it was like Bitcoin Cash, Litecoin was pumping at the end of that bubble. Now we have things like Pepe and Botcoin pumping. I think those are some red flags that could be indicative of the fact that Bitcoin has topped out for the interim, and we are headed back down to perhaps test 20K.
Yeah, no, I think it's very much worth mentioning in terms of, looking at, because I think pretty much, and just to confirm, CJ, the chart that you had pulled up, when you were drawing the bars on the left side, that was the 2019 echo bubble, correct? Or was that 20?
Yeah.
Yeah. Okay.
Yeah, that was
So
2029 or 2019. Yeah.
2019, exactly, before, we had the COVID crash and then subsequent pump and things like that. So a lot of similarities in the chart in terms of, if we look at can we pull that chart up again just to go ahead and make the quick comparison for everybody? Because if I'm just drawing lines in the nethers, it may not work, but I'll wait for you to pull that up, CJ, before I move further.
This is switch to area. Switch to CJ's screen. There we go.
There we go. Okay. So if we look at it, I mean, and we, CJ and Monty, we actually talked about the fractals, comparing the current fractals, meaning like what happened in January to February compared to what happened in obviously March, April, moving into May. It looks very similar in terms of both standpoints. So we had two fractals in 2019. We had two fractals now. Very similar timeline, very similar trajectory as well. I don't think we rose as high on a percentage basis as we did now compared to 2019, but very similar at the end of the day. So when you look at that, and the biggest thing to me is that the high, of course, is also coinciding with the low from 2021 or 2022, as well as that low in May of 2022 as well. So yeah, so that early to mid 2021 level, and the early to mid 2022 level where the cursor is now, and where the cursor also just hit. So that would be the general resistance area from the previous range. And then, what would make sense is obviously selling off. Now we could, of course, accept somehow above, 31K and make this happen. But as it stands right now, it does look like we are making a lower high from a higher time frame perspective, and that we're now moving to the low end of the range, potentially down to the high of the previous range that we hit in February and March. So, and this is just basic market structure, guys. So when you're looking at it, you obviously bounced at the start of the year, then you had that subsequent dump. So you're making a higher low. And then obviously, you propelled higher, and now we're moving lower. So bulls want to see another higher low come in, around 25K. Bears want to see us obviously come down to 25K and fail as well. So in your mindset, maybe CJ wants to hop in here after Monty mentioned it, but you have been more or less a resident bull here. So what would make you, or I mean a bear, I'm sorry, I don't want to mislabel you. So what would make you bullish? Or is there every sign that you have right now just telling you that bearish is likely the indication that you should have?
Yeah, so we talked about that symmetrical triangle last week, and I was just looking at it from a very purely technical analysis perspective, like market structure perspective, because if you kind of have been trading based on those approaches, you've done very well in 2023. The charts have been very, very clean in terms of technicals with Bitcoin. So the fact that we had put in our first lower high around, 28K and are now what looks like starting to be putting in a lower low, if we keep going lower. What would get me bullish is simply just if we made a higher low here at 27.5 and then proceeded to make a higher high above 32K. But I would say right now, if you were to go through like a checklist item, like we do have a lot of check marks pointing towards, like, I think favoring the bearish argument. Obviously, we went over a lot of those previously, so I'm not going to reiterate all of them. But I do think the play for the next few months is going to be holding like altcoin shorts relative to their BTC pairs. There are a couple altcoin shorts that I have and have talked about. Render specifically was a good one that one of the viewers had brought up last week. I mean,
I
everything's
think they brought that up last Tuesday, if I'm correct, and it's been only down since then.
Yeah, so positioning in those has been a really good strategy. Now, today is a tough day to jump in and get short. I'm really looking for kind of an underside retest of resistance. I don't know if we'll get it, but I would hope that we get it so that I can kind of double leverage or add a little bit more to these positions, because I think with today's bearish engulfing candles, like virtually across the board, you're just kind of increasing the probability that we do make a lower low and this turns into potentially like a little Wyckoff distribution top looking thing, kind of like what we got at the start of the top on our first time around. Maybe not as pronounced, but generally speaking, I think that's what we're starting to form. But to answer your initial question, like you just need to see higher highs and higher lows in order for me to get bullish. There's a very basic approach of just Dow theory and looking at if we're making a lower high and potentially lower lows, like this could be the first instance of the trend changing. And the reason why, I'll wrap it up, this is the last thing. The reason why I really wanted to remain disciplined to that is because one of the trades that I missed that, if you just would have looked at the first lower high after this parabolic uptrend, that was ultimately the top. And that was for the DXY. I don't know if you guys have that chart up at all, but all you had to look at on that parabolic uptrend was the first lower high, and then it never traded higher.
Yeah, and another thing, and thank you for mentioning all of that, CJ. I definitely agree with you in terms of what we're looking at in terms of price action, and something that I want to bring up for everybody, just because I think pattern watching is important in crypto, and something that has been talked about a lot recently is the selling on Monday. So the last Monday that we had was bullish was April 10th. Since then, pretty much every single Monday has been bearish, and I'm just going to go down the charts and kind of just hover over some areas. But a lot of Mondays have been bearish, and then we've been followed by bullish Tuesdays. So 25th of April was pretty bullish. 2nd of May was pretty bullish. And even down here, the 17th of April, or 18th of April, I should say, was also pretty bullish. So we have seen a lot of selling on Monday. So just to kind of give you guys a bit of an understanding for, maybe short-term market moves, it's been pretty much what the past 3 to 4 Mondays have been sells and Tuesdays have been buys. So if we do hold, the levels that we're at right now, so Bitcoin's kind of hasn't fully swept, but is trying to sweep the 27.2 level. If we can hold 27.2 into Tuesday morning, then I think we definitely have the possibility of maybe reattacking 28, maybe getting as high as 28.5, maybe something up to 29 at the very least. So that's something that I just wanted to point out, that I don't disagree with CJ in terms of his longer term outlook, but just to kind of bring it back in terms of a local perspective, Mondays have been very bearish and Tuesdays have been a little bit more euphoric. Doesn't mean we're going to climb all the way back, but there is potential reason for hope if we can hold support levels into tomorrow. So moving away from looking at the local time frame, Monty, wanted to bring you back in. What trades are you looking at right now? We do have, we've been more or less kind of bearish alts and everything going on the show for the past couple of weeks, obviously rightfully so. But we do have inflation prints this week. So we have CPI on Wednesday, we have PPI on Thursday. The market will likely be looking for those core numbers as they have been. If we get a big drop in CPI or PPI, market should react well, but we want to see those core numbers decreasing. So just with the thought of potentially decreasing inflation, which has been the trend, and inflation print weeks have been, I don't want to say bullish overall, but have brought forth some green candles. Is that making you rethink any shorts after today, considering we've got so much bearish price action? Meaning, should we wait? Would you wait for some higher prices? Are there any trades that you're looking at around CPI, or does inflation even matter to you in the context of crypto right now?
All those are good questions. And I do want to get back to kind of what you started off the show with, and talking about the fact that we're seeing equities perform well and crypto is dumping hard. And to answer your question, no, I wouldn't necessarily be looking to short anything today. We're down big. But it's important to remember that this is happening in the midst of positive equity price action. And we have many major assets continuing to grind higher. If you can go ahead and pull up my screen real quick, I'll just provide a couple examples. Apple, after its earnings report, I think we're still kind of running from, off the high from this earnings report. And as you can see, making local highs, continuing to look very strong. However, if we zoom out a bit, you can see we're approaching this level here of about 175, which was a level of strong distribution in a similar but much shorter and faster kind of echo bubble bounce from the bottom. So that makes me wonder, are we approaching that same level in equities? Because it's not just Apple that's happening with, other stocks as well. Take Nvidia, for example, right? Looks like a great chart. Been since the start of the year, just in up only mode. However, we are now reaching levels that were former resistance during this period in time in which we saw, some of the most bullish price action. I think that these were actually three of the most bullish days in price action history in terms of like the Qs. And now we're coming up against that level. So with Bitcoin being down today 3% and the Qs, being flat, I have to wonder what happens if we get rejected at these levels in these major assets like Apple and Nvidia, and all of a sudden we get some negative price action in the Qs, which is not out of the realm of possibility. I think that would be very, very bad for Bitcoin, and that is what would lead to the breakdown below this level. I have this level here marked about 27.2 as a level of kind of support. We've seen consolidation there in the past, but if we break down, if we see Apple get rejected off the highs, if we see Nvidia get rejected off the highs, if we see the Qs have a negative day, I think Bitcoin goes down hard. And with it comes a lot of the assets. We've talked about some of them, but I think there are so many opportunities right now for short plays. I like what CJ said in terms of shorting them with their BTC pairs, but even still, assets like Chili's, assets like Mana. I mean, look at this. This is essentially breaking below former support that we found back in March. And from here, really there isn't any support until the lows of around 30 cents. This could be a very profitable and under the radar short because not a lot of people are talking about it. People are talking about kind of the meme coins right now. And it's, that's been reflected in the price action of things like Pepe. So what I'm looking for is kind of these under the radar short plays, plays that aren't necessarily being talked about as vigorously on Twitter. So, that would be a useful instance for sentiment, kind of looking for ones that are kind of, like I said, flying under the radar, not too much short interest. It really greatens your chance of not getting squeezed out. And I think Mana is a good example. Not a whole lot of people talking about it, but you can see that in other assets as well. GRT approaching a similar breakdown level, where I think if we break down below essentially the 10-cent level, this thing goes back down to the lows and retests what is essentially 50 cents or 5 cents. I mean, so yeah, those are the type of plays I'm looking for. The kind of low key, under the radar plays that not everyone's talking about. Not the Pepes, not the Bob coins, not the assets that have gone absolutely parabolic. I'm looking for ones that have been more so under the radar, and I think that they will provide nice, safe shorting opportunities.
So what you're telling me is you don't have a Pepe call that's going to do 1,000,000% in a couple days? Because that's the only reason we're here.
Unfortunately, I can't provide you with that. But what I would say is, if you are going to have the balls to short Pepe after this sort of move, be ready for a bounce, because this asset is a wild Bronco, and it will
Pull up the last chart that you're on. What was that? GRT?
Yeah, GRT.
So just to make and zoom out like really quick, go to that. So just to make the quick comparison to Pepe, so parabolic advance, blow off top, sells off 40, 50%, and everybody and their brother is shorting. So move to that next low on the 15th of March, Monty. So that everybody and their brother is shorting right there at those wicks, right? And then it creeps back towards the previous range, right? So then go to Pepe. So let's just kind of look at the direct market cycle for crypto, right? So Pepe is now forming it's obviously still got plenty of time to finish the daily candle and form more wicks, but it looks exactly like the GRT chart, doesn't it? Parabolic advance, blow off top, drops 40, 50% back to a previous range, starts to form wicks, and then it'll probably jump back to, what is that number? 2,500, somewhere around there, maybe that 30 number. So that's what I would expect from Pepe. Could it certainly drop further? Yes. But am I shorting something down 40 to 60%? No, because I expect it to probably react similarly to how GRT reacted due to, the meme ability. GRT was an AI, coin or whatever. Pepe is a meme coin. So I expect that market cycle to play out very similarly.
Do you agree? I was just say Nick's making a pretty good
CJ.
Case for a long here.
And that's what I'm not saying.
Counterintuitive as this may seem.
I guess I suppose that I am. I would not try and catch the Pepe knife by any means, but I am saying, if we get a couple of more if we get a couple of more candles in and it holds that low and it's just wicking down at that level, I would expect an a further price advance to then, add to shorts. So, but I do, yeah. Good point there, CJ. Certainly not telling anybody along Pepe here. Certainly not.
I was just thinking myself. I'm like, that's the GRT. That doesn't look bad.
I mean, if you're
I'm going to say don't, because I don't need any Wells notices at my door. So do not listen to me if you think I was saying long Pepe. Final note for Monty before we kick it back to CJ is, what's up with the Kospi index? It's been kind of a common theme in our discussions. So only Bob Dietrich, and apologies if I botched your name, Bob, but you did make a funny comment in the chat. It says, only in crypto can you hear things like quote unquote Pepe knife. If anybody does have a Pepe knife, I will buy it from you. So please send me that eBay listing. But please, Monty, back to what's going on with the Kospi.
Yeah, so the Kospi has been very important, particularly for ETH. We talked about that correlation coefficient being the highest amongst any indices and a single crypto asset. And I think that's still ringing true here today. Now, of course, what we're seeing in U.S. equities is positive price action, particularly in the tech sector. Stocks like Apple, Nvidia, ones that I had just talked about, continuing to grind higher. The Kospi, on the other hand, has kind of it does look like it's putting in that higher low, right? Or that lower high, where it had a great run up here and then crashed hard, fell off this level of support where we was previously resistance, was flipped to support, but was just unable to find the same amount of positive price action that led it back up to this 2,500 or above to like the 2,560 level. So now we're kind of lingering around this level, and I would watch for a potential breakdown below this 20-period smooth moving average. This is what I like to use for like the identifying when a trend is starting. And it looks like, to me, I'd watch this closely tonight. Tune in at around 7 o'clock, check this chart, or around 9 o'clock, see where it's at, because if we're headed back down below the 20-period smooth moving average here, this purple line, that's not very good for crypto, particularly ETH. And I think it sets up for some nice ETH related altcoin short plays, which is something we haven't really talked about. So the Kospi not looking strong. And if we do break down below this level, this is kind of like a break or bounce situation for the Kospi. It could put some heavy sell pressure on the ETH. And I think we're already seeing it kind of reflected in the Kospi. You know, that's not just Western price action. There's also Eastern traders trading these meme coins. And if the Kospi does bounce, then that's a case for Pepe perhaps bouncing, because we've seen the Asia indices kind of be a metric for risk on price action. And if the Kospi bounces off 20 period smooth moving average, moves above essentially this level here where we got rejected last week at about 25.25 or yeah, 25.25, get it right above this level. That's a case where you see Pepe run. You see short get squeezed. You see risk tolerance come back in, and those sort of alts run maybe one last time. So that's something I'm watching out for. I think it's definitely a possibility. So bounce, or it's either bounce or break for the Kospi, and I think that will dictate what we see from ETH and basically every altcoin tonight.
Alrighty, makes sense. I mean, I've been watching it, but I do agree with you that that recent weakness, I should say, is certainly something to take note of, especially with crypto dropping and equities, trying to find whatever footing they possibly can. Just to quickly bring back up the equities chart after that quote unquote dump, is we are right back to where we opened, with a pretty beautiful wick sweeping the range lows, which I don't think any of us had in our bingo card for that dump. So, equities are continually chugging along. And again, we do have CPI and PPI on Wednesday and Thursday, respectively, which will certainly play, I think, more so into equities than crypto, just, due to the obvious correlation between, equities price action and inflation due to, the economic factors. And crypto is not really playing too much of a supporter for global economies yet. So, moving forward, CJ, wanted to bring you in because I know you've been, more or less, macro shorts on the crypto side of things, definitely more focused on the Bitcoin trading pairs. But you also, are dabbling in some commodities trades, some equities trades, which people may be interested in, considering crypto is pretty much, click the red button and walk away recently. So what are you looking at, and what should we be looking at as well?
Yeah, there's about 3 that I've been looking at, so I'll go ahead and present some of that data. So yeah, I should be able to see it now.
Yes, sir.
So 2 trades I took Friday and then today as well. First is going to be soybean oil. A lot of these in general have been somewhat bullish, but the one with the most shorts that's actually performed the best off of the low has been ZL, or soybean oil futures. In terms of like positioning data, I really like this because you see small specs and large specs getting the most long or the most short that they've been in quite a while. And then conversely, commercials are beginning to really be aggressive in terms of longs for the first time in quite a while. Last time we saw this in terms of like this compression, you can see right here near our previous local low, that's when we had kind of a return to the mean, or a more like reset, I guess you could think of it, in terms of commercials being long. So they really got long down here. And we also had a buy signal within the COT oscillator that remains at 100. So we're getting basically all of the buy signals necessary for what I deem to be the conditions necessary to enter a long trade. In terms of news, we have a crop report known as the WASD that is coming out Friday. And so, yeah, we should get one. And that's usually a pretty big market mover for things like softs and grains. So that could definitely create some volatility. But the point of this trade, and I guess how you could think of it, is that there are a lot of shorts still within this. And very much like commercials are not really long. They're starting to get long, which is really good to see at the beginning of a move. So if the short squeeze does occur, it's going to probably go much higher compared to where I would be stopped out on this trade if I was wrong, which would be the recent low at like 50. So for a long position, I would like to, I already am in this one. We've talked a lot about it in our community, but if we get a continued pullback and then a little bit of resistance or a little bit of bounce from support, I will be looking to add that and potentially ride it up to whenever positioning data goes back to neutral. But if you could capture a move like this, or even like an echo bubble like this, after, basically a 6-month long downtrend, that could be, you only need like 3 or 4 of those and, you get your 20% returns. So I really like soybean oil from that perspective. If it stops out, then, 100 basis point loss or 150 basis point loss, whatever, we move on. So that one's interesting to me. In terms of the crop report coming out Friday, there's a lot of interesting assets. Nick, when you and I had the solo episode on Thursday, we talked about that phantom, INJ type market structure where you come up to make the double top and then that weakness finally leads price much lower. I think sugar could be doing something like that. I'm not currently short. I tried this short a couple times and got stopped out. So I'm being very patient now. But yeah, Friday, really, if you're trading these assets, make sure you pay attention to that report and the price action that we see during it. Usually the first move is the correct move, kind of like the opposite of CPI and FOMC. Last one I want to talk about in terms of high conviction trades and positioning that's aligning pretty well is heating oil. And not just heating oil, but a lot of the oils in general, like CL, are showing buy signals. Kind of ironic because a lot of people have been talking, it seems, about how these assets have been bearish, and therefore that kind of indicates a crash in the economy. But we're actually starting to see bullish signals. You can see retail basically puking their longs over the past, few weeks over that sell-off. Now we're finally at a level where we're like reset to normal, similar to soybean oil, and we are creating defined risk. And if you look at the 3-day chart, I really like this bullish fractal. I like the fractal patterns a lot. As you can see, they've done pretty well, like here, here, and here. Obviously, the downtrend, you really missed it. That's why you got to manage risk accordingly. But overall, I like this one. It's basically the identical setup in terms of positioning and technicals when compared to soybean oil. So I just look for those. I think those are currently the best setups and the assets within the futures markets that are providing the greatest potential opportunities. In terms of equities and their positioning, it's starting to become a little bit more difficult to just say, okay, everybody's short, so now we might as well take longs with defined risk. The choppy environment in equities, I haven't really been trading since last week. I don't really plan to. But if I was going to trade that, it would be with like a wide stop and much less size, because I think you need more flexibility in a weird, just uncertain environment like that. But anyways, do you guys have any questions on the soybean oil or heating lamp oil type stuff?
Do they still trade
I leave
oil?
that stuff to the experts, man. You seem to know what's going on. I personally am not, splashing around too much in the TradeFi markets, but I think many of our viewers, certainly appreciate it because personally, I'm getting a little bit bored from just strictly crypto trading. And I think, having a round view of the market is certainly more beneficial than only focusing on one singular market itself. So, and just to kind of open that question broader to the audience, we have been, we actually got a really good short opportunity thanks to someone, mentioning a coin in the chat. So if you do want us to cover any specific asset, whether it is crypto, equities, commodities, so be it, please feel free to pop that in the comments, and we will cover, it's to the best of our ability. And of course, let you know what our immediate opinions are if we think it's a good opportunity as well. So, but CJ, no, that was fantastic. So, my one thing that I'll kind of bring you to, just that I didn't hear is, talking about the commodities that Gary Gensler refuses to mention, speaking specifically about Bitcoin and Ethereum. Is there anything, in specifically those two assets that you're looking for, maybe within correlation to the TradeFi markets, or any signals that you're looking for trading those assets? Or are you just, you're just so angry at how ugly the volatility has been that you're just putting them to sleep on the other screen and setting alerts and forgetting them?
Yeah, I like to do that. I've actually killed 2 of my monitors of my 3 so that I don't have to look at prices. I highly recommend it.
One of them he literally killed.
Oh yeah, I broke them. Yeah, out of anger and trading frustration. No, I didn't actually, but it was getting close to that.
Set up a little escape room in the house or one of the demolition rooms and just get to it with a baseball bat.
It's like that scene from Office Space where they take the printer out or the copier or whatever. Yep. In terms of things that I'm looking for, I think that I was falling into a little bit of what they call analysis paralysis or whatever. Looking at all of these various correlations, I just kind of decided after this recent lower high in Bitcoin that let's just forget all of the correlation. Equities may continue to go up, Kospi may continue to go up, but the fact that what we're seeing today with equities being bullish and crypto being bearish, that should not be ignored. I think that's a very strong correlation failure. That's important to take note of. Now, like I said, I'm just trying to block out everything. Don't focus on the noise and just focus on the price action. Look at the daily closes. If they're still bearish, lower highs and lower lows, then there's no need to change the plan. If we make higher highs, then we'll talk about it. But as of now, it's not looking particularly likely. So that would be kind of my answer. Trying to just purely technicals and manage risk well. And it's done okay so far.
Yeah, and to piggyback off of that, my 2 biggest suggestions to everyone watching are, the easiest suggestion is, and I guess, it's easy for me to say, but is to focus on a few assets. If you're watching 10 to 20 altcoins plus Bitcoin plus Ethereum plus, a couple of stocks, talk about analysis by paralysis. You could get a great idea on Bitcoin, then you look at ETH and you're like, and then you kind of come back and then it starts to kind of sway your whole outlook for every single asset. So my suggestion would be, decrease the amount of assets you're tracking, track them closely, enter, at the most opportune time, which, we cover very well. And then the other thing to cover would be, just associated with, sizing and, just generally attacking the market is, I'm losing my train of thought a little bit here, but, in addition to only tracking a small amount of assets is, only taking the opportune trade. So you don't need to trade every single day. And I will tell you the most opportune trades that I typically see are at the US Open. So 9:30 a.m. Eastern. You typically can figure out where directionality is headed based on the open and interest at the open, as well as the daily close. So 8 p.m. Eastern is when the daily close happens for all cryptocurrencies globally. And you can generally tell it used to be much better than it is today, but wherever momentum is headed at that point in time, wherever the daily closes and subsequently opens, is if you're seeing an immediate sell-off right at that 8 p.m. Eastern, probably going to sell off most of the session. So, looking for those opportune times, track a few coins, notice when volatility is driven. And I'll tell you, the market is most volatile from what I can see at US market open and crypto daily market close. And, those are 2 times on opposite ends of the day that you can attack trades and try and time up your trades as well. And you'll know that you have 2 time periods and only 3 to 4 assets to track and trade. Therefore, that may decrease your confusion or your analysis by paralysis. So
that's such good advice.
Thank you, CJ.
That's just such good advice. I mean, I was doing P&L analysis over the year of 2022 and some of those trades. And it's I think it was 5 or 6 trades accounted for 80% of any type of profits. So this isn't I think people, especially younger traders or newer traders, will come into the field and be like, I need more trades equals more money. And it could not be more opposite. So it's only you only need 4 or 5 or 3 or 6, 7, single digit. That's really, if you nail that many, you can still do really, really well, as long as you cut losers quick. But I totally agree with that. Cannot emphasize that enough.
Thank you, CJ, and shout out Bob, who's been very active in the chat. Although he is a Bengals fan, I will be kind and admit that they have been playing much better than the Steelers. So, Bob, I'll give that to you. But Monty and CJ are located in Chicago, and I can say that the Steelers are better than the Bears. So, therefore, I just had to slip that in. But let's move. Let's move to Snap, which was requested by Bob for us to review. And I think without the ticker, I think one of us would have picked a random shitcoin to attach to this chart. So, Bob, I will go ahead and apologize if you are a 2021 or 2022 Snap buyer. Clearly has not worked out too well, but what I will notice is based on IPO dates to now is it is still above its low. Doesn't mean it's going to go higher, but you do still have one kind of final support level down here at the $5 level before it starts to enter, the wrong kind of price discovery, I should say. So you have 3 taps down here at around the $8 level. And like I said, you have support down here at 5. So if you crack below 8, you're pretty much guaranteed to go to 5, in my opinion. If you can hold 8, you're likely to go to 13. And that is pretty much as far as I am willing to predict Snap. Did Snap already report earnings, guys?
Looks like they've got it. Oh, no, that's in a month from now. Yeah, click on the most recent, that green E at the bottom of the chart.
They were positive, but it doesn't even really matter. They beat earnings, missed revenue.
There you go.
But one thing that is
they did just recently report. Go ahead.
Yeah, Bob pointed this out in the chat as well, is that there's been some unusually large options orders around Snap, excuse me. And I find that to be quite interesting. Whenever that happens, you typically should take notice. It's like a whale betting on, a stock. And it's been for the last 3 weeks while we've been kind of consolidating in this range. So while the rest of the market kind of moves around, it moves up, moves down, this has just been chopping. And I think because of that unusual option activity, Bob says there's 134,000 June contracts were purchased. So, maybe worth a bet. Like this is kind of like a lotto ticket trade, if you ask me. You buy an option out of the money, perhaps up towards the moving average. This thing's been consolidating for how long now at these ranges? Like
it dropped to 16 or dropped below 16 on the 24th of May, 2022. So nearly a full year.
Yeah. So, and yeah, Bob says it's a lotto for him. And I think that's the way, if you're looking at it from that perspective, then that's a solid trade, backing UOA, following the big traders, following the sophisticated money is probably the easiest way to make money. That being said, they're not always right. So take it with a grain of salt.
I will say the one supporting factor I have seen since, and we still have this massive gap here. So take it obviously with a grain of salt. I'm sure it'll cover it eventually. Is each subsequent drop that has created a gap has brought forth or subsequently brought with it wins of at least trying to close the gap. Not saying it will, but every gap I'm seeing on the chart, there is an attempt to close that gap. So we have a recent gap from the beginning of the month, which, if those calls are what we're talking about for June, potentially you could be in profit, maybe to 10, where I would expect resistance to kind of start is right around this level. And then if you can get up above it, then you can obviously attack that, low 12, mid 12 level. So I can see it. I don't really have too much. I don't obviously track Snap too much, and, earnings did just report. So there is going to be a gap of information, but, based on that kind of gap closing pattern that we've seen, I would say, low or high $9, low $10 is very reasonable for a bounce opportunity. So, but it could take several weeks. So,
yeah.
I think this.
Go ahead,
I
CJ.
think this trade is like you're betting on a buyout of Snapchat from somebody, I think. Because why else would you be like, why else would somebody buy numerous amounts of calls, like tens of millions of dollars of calls? It has to be a buyout rumor or buyout discussion because there's no like I get we're testing support, but to me it's 50-50 here if we just kept going up or broke through that, midpoint of support that you've got there. So it has to, like, what else would it be? Any ideas, guys?
No,
Agree,
I think
disagree?
I think that would be the best one. I mean, either that or they're going to announce even more layoffs or something like that. I don't know. I can't imagine what would benefit them other than doubling their revenue, cutting half their workforce, or getting bought out.
Who would buy them? Meta?
Yeah, Meta would buy them, I would assume, and integrate their
and get an antitrust lawsuit as well. I mean, I'm not even joking about that either. I mean, there's only so many top AR metaverse companies right now.
Yeah. But I don't know if those laws are applied as rigorously as they were back in the.
This ain't exactly Standard Oil these days.
Yeah,
I do agree, but there was just a big one that got cut in the UK and is now likely to get cut in the US. What acquisition is that? UK cancel acquisition. It was a big one. It was like Microsoft or something like that.
I think it is somewhat inevitable. It just kind of depends on how.
Oh, it's Activision Microsoft. The UK regulator cut that, and now it's likely to get cut in the US.
Microsoft was going to buy Activision Blizzard.
Yes. And the UK regulator said no. And since the UK is denying it, it's probably just going to get cut in the US too, because they're not going to drop their Europe business.
Yeah. Well, Activision Blizzard is in my opinion, a horrible company. So I don't know why they want to buy them anyway, but.
Yeah, a horrible company.
Tell us how you feel, Monty. Why is that?
Huh?
I'm joking. We don't have to get into it. I think we all know the background between what happened with Blizzard the other year. So.
Does Overwatch not make money?
No.
Why are they bad, Monty? I'm curious.
They're bad
I
because
play a lot of Blizzard games.
Yeah, they're bad because one, their company culture is terrible and has been for decades. They launched Overwatch 2, which was an abysmal mistake. It's identical to the first game, and it basically killed the entire community. Now I can't even call it Overwatch community. And in terms of the Activision half of things, every year it's churning out the newest Call of Duty games that you're, Dorito eating, Mountain Dew chugging, Xbox playing people will go ahead and buy year over year.
You're hitting a little close to home here. All right, just take it down a notch.
I think that business model is coming to an end. I think all games are going to be free to play eventually, and everything will be in-game microtransactions. So Activision's Blizzard's model of churning out a new Call of Duty game every year, and expecting people to pay $70 for it, is antiquated and just a horrible business model at best. So
I like this tangent we're going on because we have got a lot of fundamental experience with this stuff. You speak of churning out bullshit every single year. Nick, could you please pull up the chart of Electronic Arts? Because they are the king of creating. I mean, look, I love NBA 2K. Great game. But it's the same game every year.
Yeah, so it's FIFA.
So yeah,
I'll tell you what, I've been enjoying that Tiger Woods PGA though, which I think is not EA though. So that may detract from
The best
conversation.
one they made was in like 2004, and they've never made a better
It's a hell
one
of-
ever since.
It's a hell of a chart, though. Let's see how far back this trend line goes.
Yeah, it's an interesting model, interesting industry.
I mean, that fits. Trend
I wonder
line
if
dates
you,
back
I
to
wonder,
16.
Monty, what do you think about like a pairs trade between EA and Activision? I don't know how you'd do it. You'd probably like if you'd short Electronic Arts, long Blizzard, Activision. I just
Yeah,
don't know which one I'd be more
I
bullish
mean,
or bearish on.
is this just one giant bull flag?
I just don't get why anyone would be bullish from a fundamental perspective on this stock. Like I said, their model of gaining revenue in terms of churning out a new game year after year, that is antiquated. Like that is like something that was popular. Remember back when people used to wait outside Best Buy to buy the new Call of Duty game? Like, yeah, that was exciting when you had to buy a physical disc. But that's
Yeah. I haven't walked into a store to buy a game in forever. Like I bought Hogwarts and everything on my Xbox.
Yeah, right.
You
And
can,
like,
you can do the pre-order and the pre-download now too.
This is like when the Hollywood industry, I mean, they still kind of do it, but I feel like you've seen a massive change in the way that movies have been made because they're always kind of like massive investment blockbuster hits instead of like the smaller independent films. Like a film like Reservoir Dogs comes to mind. It just you wouldn't see it have popularity in the mainstream these days because of the shift to streaming services. And I think it's a very like similar thing. Like, when Rockstar would make a game in the early 2000s when there was no live, they had like the game was what you were paying for. Nowadays, the game's free and all the microtransactions, whether you want to buy a Fortnite skin or whatever. I think I bought one. It was like this ghillie suit, so I had to buy it. But that's the only one.
Well,
but it's like $8, right? And
what blows my mind
it's a different
is
model.
You're 100% right. Like back in the day, we used to buy Call of Duty to play the campaign. Like live was like this brand new concept. Like it was like LAN focused and all this. But with the new games and stuff like that, I mean, Monty's 100% correct. Like everybody's, moving into this, free to play with the, with the freemium models and stuff like that. And I'm again, absolutely losing my train of thought here in terms of what I was wanting to say. Oh my! I literally just completely forgot what I wanted to say. So my apologies.
One thing that I like to say is that Counter-Strike is a free-to-play game.
That was what I was going to say. Is the Counter-Strike skins and the NFTs? Yes, Monty.
Oh, here we go.
Take it away for me.
Monty's blue knife is coming out.
Well,
countdown.
They're expensive, and people pay money for them. Like I think there was one that was like had a female like body part kind of like looking one that was selling for like over $1 million or something like that. I don't know what the exact amount was, and they're not NFTing these things. And I think most of the community is anti NFT as well. And I'm like, you're already selling these things for money.
Yeah, the problem is though, Valve gains nothing from putting all this on a blockchain. Like they gain nothing. They take a huge fee when you sell a skin. I have some really nice skins that have gone up in price significantly. But the reason why the skins have any value at all, Counter-Strike has been the most played game on Steam for like 10 years running. And that's not even an exaggeration. If you look at most hours played on Steam, Counter-Strike has been at the top of that list for literally 10 years. Like just that is dominance in the gaming industry that you don't see often. A game with that sort of longevity. And it's because of the in-game microtransactions and the skins. People love that shit. People love opening loot boxes and, having the chance of getting this rare knife. And it's amazing because so I have a couple of really nice skins. And if you sell them in the Steam marketplace, you'll get a lot more money because when you sell it within Steam, then you can only use it to buy Steam items. You can't withdraw the money from Steam. So it just goes to your Steam wallet. So I sold one of my knives, and now I'm Steam rich. I have all this money on Steam
So,
that
so
I
there's
can't.
no way to get cash for these Steam dollars?
No, Steam dollars cannot be converted to cash. So that's unfortunate. But there are third-party sites where you can sell the skins. So I go on those sites. Of course, you'll get a little bit less because you can withdraw the money, but you can sell the skins, get the money, send it to your PayPal, or even take it in Bitcoin. Um, I've done it.
And so these are third party. These are not Steam. These are not the CS:GO founders or
Nope.
company. This is this is Nick Monty and CJ's CS:GO skin shop, so to speak.
Yep. Essentially that. The one I use is called D Market. It's based in the Ukraine, but it's pretty staggering how many people play that game, and like I just
But
think
if
that
it was all on the blockchain, like let's say not even Ethereum, like let's say Matic or OP or something, for decreased costs or whatever. So the company that puts out CS:GO would have control and some sort of autonomy over the licensing and outsourcing of these projects. So if I wanted to start an exchange, I would understand all of the inner workings of the contract, of the assets, of the legality with the company, and then the company would always be able to take a cut of each of those transactions. So the company doesn't. It sounds like the company is not getting any money if you sell your knife to Joe Smith in Kentucky. The company doesn't get anything from that other than you paying them originally. But if they could get downstream revenue, I don't see how they wouldn't want something like that. Or are you saying that
no,
they don't
the
want that?
problem is it always has to go through Steam. So even if I go through a third-party site, I have to accept the trade on Steam. So I give them the skin for nothing, and then they give me the money. So it all has to go through Steam, and Steam always gets a cut of the revenue.
It sounds like Silk Road 1.0.
Oh, it is in many ways. It is. And like in order to circumvent the Valve rules, like you need to, or Steam and Valve, you need to use these third parties. But either way, there's a joke they call Gabe is the founder of Valve. I forget his last name, but they call him like Gaben, and he's like basically the ruler. He's the Satoshi, the Vitalik
He's got like a
of
Dungeons and Dragons type aesthetic to
yeah.
him. He's like,
Oh, 100%. Look him up, Gabe from Valve. But like he added this idea into TF2, and I think that that's the way that games are heading. Free to play with in-game microtransactions, and that's why I think Activision Blizzard, their business model's antiquated, and they'll likely be either bought up by a different company, although that was recently blocked. Like I just don't see how Activision Blizzard continues to convince kids to buy their games when there's so many games that are free to play. And FIFA 2021 is no different than FIFA 2024. I've played them both. They're
I'll
basically
tell you
the
what,
same.
Madden 23 is worse than 2022, and from what it's horrible. But sorry, apologies to everyone if you're not into NFTs or gaming, but I think this conversation very much applies to how is blockchain going to drive value, create revenue, and continue to grow. And I think we're talking about one of the obvious, applications is we just talked about Activision's not getting any downstream revenue from assets in the game. CSGO is not getting any downstream revenue from assets being traded on a third-party site. And of course, plenty of people could get screwed or lose their money and then no longer play CSGO because they have to get a job or pissed off at the world or whatever. So, and we've all been there. We've all lost our money and gotten scammed in one way, shape, or form. And we know it feels like the worst thing ever. And you want to punch your computer screen and walk away. So, but what we're talking about is the application of value, whether or not it's some sort of, supply chain token to track wine, that's one side, but in-game transactions, online transactions, and having creators retain revenue and value downstream is where long-term revenue is going to be created. If this $1 million skin is being traded every year for $1 million, the company should receive $5 to $10 or whatever $1,000 downstream for the commission of that sale, provided they are the original owner. So, we're talking about, how these things grow. So with that being said, doesn't sound like any of our followers or listeners have any more suggestions or asks for us, and we are at the top of the hour, another full hour session with you guys. So we're going to go ahead and get out of here. Before we leave, CJ, Monty, do you guys want to speak a little bit about Market Rebellion and how people can join?
Yeah, you could join at the link below for just $1 and try it out. Monty and I publish a lot of research and we talk about our trades that we're taking each and every day, very much like we do on this show. But we have a daily video that's about 20-30 minutes long where we're just talking about our trades and what we see in the markets. Also have a live chat that you guys can ask questions and communicate with our other members. So, if you decide to join, we'd really love to have you, and we think you'd like it a lot. And you can join at the link below. But thanks, Nick. And I do think there's a solution for Valve. They just have to launch Valve token, and then anyone who holds Valve gets a portion of token revenue from the fees. But that'll never happen because, I'm kidding.
Valve, if you're listening, we got your founders right here. Us three. Valve Coin. All right, before we go, I just want to also throw out there tradethechain.com. We offer sentiment data, market data, as well as an international community of traders to track, follow, and learn about new trades. We send multiple trade updates every single morning, do daily videos, and of course have a beautiful community and data dashboard as well. So we're going to go ahead and get out of here. We will see you on Thursday. We are here every Monday and Thursday at 2 p.m. Eastern to drop all of the market insights for you. So good luck. Happy trading. See everybody soon.